Mm. Salt is good. Hey guys, so today I thought I'd make a video about how you can increase your credit score one very simple step, because I just got approved for the Windham rewards card that I had applied for in a previous video. And I thought I'd just make a quick video showing you how you as well can very easily increase your credit score by following this very one simple step. It's just one step in this video. There are many different things that go into your credit score, as you can see here on this Discover portal. So Discover is kind of cool. It gives you your FICO credit scorecard as of whatever date that you log into the portal and check it. Right now, my FICO score is, I guess it's called the FICO score actually, sitting at a 790. It's not the best, but it's also not the worst. I think it could get better. It tells you how many accounts that you've had, how many years you've had your credit history, how many inquiries you've had in the past, I don't know, I guess 1 or 2 years. Let's check. One credit inquiry in the past 12 months, and I have revolving utilization of 9%. Actually, let's just go through these real quick, right? So, as Discover tells us, our FICO score is based on TransUnion data, and it gives you a little bit of information about what's helping it. So what's helping mine is no missed payments, which is good. If you miss a payment, it lowers your credit score. I think that's one of the biggest components of the credit score. Long credit history, that's pretty good. I guess 6 years is long enough for it to be green. It was yellow before. 5 years it was yellow, so nice. What's hurting is a credit mix, lack of credit mix rather. I only have credit cards, and I only had one car loan in the past, so they take that into account as well. If you have different types of loans, that means you're a more reputable borrower, I guess. They also give you a nice credit score history here. So it goes back, it looks like it goes back 1 year. Last year, my credit score was 780, lower than it was today, but not too bad. And then it was, in that same range. And January 20, this is when I actually started carrying a balance on my credit cards. It jumped up to above 800. It had never done that before, so I thought that was pretty cool. Got a reward for carrying a balance on my card. I think it's nice that they do that. Everybody says don't carry a balance on your credit card, but I mean, look what happened. I started carrying a balance on my card, and I got a better FICO score than I've ever gotten before. I've never had above 800 before, but as soon as I started carrying a balance on my cards, then I got such a good score. That's amazing. So everybody says don't carry a balance, don't carry a balance. But what if you want to score above 800? What if you want a good credit score? Then you have to carry a balance, it seems. It was pretty a cool thing. But if we did this before, but if you wanted to actually get a copy of your credit report where you can see all the data and all the information that these credit bureaus have collected on you without your explicit authorization, you can go to annualcreditreport.com and fill in all your personal information, and they will give you a credit report. I recommend doing that at least once a quarter. Well, actually, not every once a quarter, but every 4 months you pull a different credit report, because you can do one credit report for free per year, unless they changed it recently after the Experian thing. I don't know. I haven't really been keeping up to date with that, but if you pull a different credit report every 4 months, then you can do so over the course of a year, and then when the year is over, you just restart the process and you pick up from where you left off, right? So total accounts. Why do total accounts matter? So total accounts make up about 10% of your FICO score. The people that lend you money, they want to know that you can responsibly manage a mix of credit types. So basically what they're saying is they want to make sure that you can build a personal financial system that allows you to manage many different cards at once, right? Without missing payments, without screwing up, without getting all kinds of fees and nonsense and not paying them their money on time. They want to get their money on time. So if you have set up a system like this, then they're going to reward you for that. Okay, that's my one car loan that I got, and these are all my credit cards. I've had 17 credit cards over the past 6 years, I guess. So let's look at length of credit. Why does length of credit matter? So the longer your credit history, the better, right? And obviously that means if you've had credit for if you just had your first credit card, right? The credit card companies don't have a really good sense about whether you're going to actually pay the bill when you get it, or you're going to let it be and not pay it, right? For them, it's kind of like a Schrodinger's credit card user, right? They don't know whether you're going to pay the bill or not. So until you actually pay it or you don't, they're not really sure what to think about you. So the longer you've had credit, it seems the higher your score is going to be. And length of credit makes up actually 15% of your FICO score. Why'd you log me out, Discover? Okay, so now let's look at the inquiries here. Why do inquiries matter? So an inquiry, by the way, is when you apply for some money, some credit, right? The lender is going to do a hard inquiry, which is, what is a hard inquiry? You give them permission to look at your credit report, so they can check all this information to see how much credit they want to give you. Well, first of all, if they want to even approve you for the credit. And then second of all, how much credit to approve for you in the case of credit cards and personal loans and that kind of thing. And then thirdly, what your interest rate is going to be, what the cost for you to borrow that money is going to be. So that's what they check for. That's why they got to check your credit history report, right? Again, because they want to make sure they get your money back, not your money back, but their money back. So that's why they check on these things. If you have too many inquiries on your credit score, your credit report, your credit score will go down. It's basically like every time you apply for credit, you're kind of asking your friend for money, right? If you keep asking your friend for money, if you ask your friend for money one time, they might give it to you and they'll be like, okay, well, he just needs it this one time. But if you ask that same friend for money like 10 times and you still haven't paid them back, right? You're making installment payments, then they're going to be like, yeah, I don't know if I want to give you money anymore. But if I do, it's going to be at a very high interest rate, right? So that's why that matters. You don't want to be asking too many different people for too much money. So having a lower number of inquiries on your credit report is a good thing. Let's look at missed payments before we get to revolving utilization, because the trick I'm going to show you has to do with the revolving utilization. So missed payments make up a big chunk of your FICO score. Okay, it makes up 35% of your FICO score. And so if you pay your creditors on time, that's the most important factor. And even one missed payment can have a big impact, right? This is kind of like, if you told your friend you're going to pay them back on Friday, you borrowed the money on Monday, and then you don't pay them back on Friday, you say, I don't have the money yet, right? Your lender's not going to like that, so they're going to ding you. They're going to report that you missed a payment, and that's going to go on your permanent credit scorecard. It's going to go on your permanent credit report. And basically that means all the other lenders can also see that you missed a payment. And if one of the lenders sees that you're missing a payment to another lender, I mean, they kind of want to know that, right? They don't want to have to discover who you are through their own personal relationship with you. They want to know who you are before they even do business with you. It's kind of like anything else, really. Okay, so then the revolving utilization, all right? This is the other thing that makes up a big chunk of your FICO score, 30%. So revolving utilization, I think, is one of the more interesting ones because it's an indicator of how much you owe on your account. It's not actually how much you owe, but rather a percentage of how much you owe. So you have something called a credit limit, which is the total amount of credit available to you. So let's say you get a credit card with a $10,000 credit limit. That means you can go and spend up to $10,000 on that credit card before they say, nope, that's too much, we're going to cut you off there, right? If you do actually use $10,000 on that credit card, you have a revolving utilization of 100% for that time period, right? Because you use 100% of your credit utilization. So what are they saying here? I guess they don't really show what is a good credit utilization, but it makes up 30% of your score. So let's look up what a good credit utilization is. So the experts at NerdWallet say that below 30% is a good guideline for most consumers, and the lower the better for your score. So Discover is telling me right now that I've used a 15,343 of my available credit, which is 9% of my total credit limit. So because I just got approved for this Windham card now, and the Windham card, it comes with a credit line, and it's a line of credit that I did not have before. So what that means necessarily is that my total credit available to me has gone up, and my amount of credit that I'm using is staying the same. So that means my revolving utilization is going to go down. So that should help my credit score over time. It did add an inquiry to my report, which is going to bring my credit score down a little bit. But over time, the credit score should be better because my revolving utilization is better. You see how that works? It's a little bit of a trade-off in the short term, but it's a long-term game here that we're playing. So what I want to do just real quick is do a quick calculation of what my new revolving utilization is going to be after the increase. So the amount that I got approved for the Windham card is a sweet $500 on my credit line. So that means my total credit available to me, again, has increased by $500. So what I'm going to do here is I'm just going to go to my balance sheet, and I'm going to create a column here on the side for credit limit. And just really briefly, I'm going to log into each of my accounts. I won't make you watch all that, but I'm going to go log into each of my accounts and just see what my credit limit is, and then add up all the scores and see what we got. And there's the Windham rewards card that I added. So I know that the credit limit for that is 500, but I'm going to add that in later because I want to calculate the after, or the before, and then the after. All right. So yeah, let me go ahead and do that, and I'll see you in a second. All right, what's up, guys? I'm back. So that was pretty simple, pretty straightforward. Just took literally like 5 minutes. So my total credit that was available to me before I got approved for this card was $176,300. So let's just take the last time I checked my balance sheet, which was $17,000. That was the amount of debt that I was carrying. So let's just divide that by this number and see what kind of number we end up with. All right, and we turn that into a percentage, and there we get that my credit utilization before the card was 9.6960%, right? So that kind of vibes with the what Discover was showing us as well. So now I'm just going to add in the $500 here onto the Windham rewards card, and I'm going to see what my new credit utilization is going to be. It should be lower, and that should help my credit score as time goes by. So let's just put in this 500 here and see what happens. Okay, so now my credit utilization is only 9.6685. So it went down quite a few percentage pointers. So I think that's gonna make a big deal. I think that's going to be pretty good, and over time, my credit score is definitely going to go back up to over 800, because, as you know, credit utilization makes up 30% of my FICO score. So because I was able to lower my utilization by such a high amount, I don't think the inquiry is really going to matter that much, because that's only 10%. But since my revolving utilization is going to go down, I think my credit score is going to go back. Oh, I guess it doesn't like us being logged in very much. But anyway, that's about it. My point being that one quick way, because credit utilization makes up such a big percentage of your credit score, you should be able to get a quick win and like really increase that credit score if you just apply for more credit. Keep your credit usage the same and then go apply for more credit, and credit score should increase. That's it for today's video. Hope you found that helpful. Take it easy. Bye.